I think it's both, isn't it?
I think it both, yeah. I think it's right. I think, yeah, it is a mixture of both at the moment, but sterling is very much weaker. We've been looking at sterling going weaker for some time now. The trend has been bad on it. Although looking at the chart we've got here, the last buy signal suggested that this was oversold. Now, that's flashed up because the green blobs at the bottom of the chart there indicate when it's extremely oversold. And sterling, even though it's extremely oversold, it continues to fall. And it's looking to fall to this 137 level. Now, ordinarily, you'd be looking to buy it as soon as it starts turning up on a speculative basis. But the trend, supported by the multi-frame inverse Fisher transform of the RSI at the top, suggests it's well off here. The vortex suggests it is trending lower, supporting that. So it is falling fast. And I would think it's out of those tram lines. Well, they put those tram lines on there because they are support resistance lines. And ordinarily, you'd expect to be coming back to a 160 level, but it doesn't want to do that. That's the 200-day, the green one. It just doesn't want to do it. So while it's in free fall mode, you have to go with it. And I would suggest that it's going to get more volatile and possibly head towards the 137 level we saw in 2009 for March time.
So that's quite a fall from here.
Yeah, because I mean, with the uncertainty over elections and growth here, I think it's a fair game. I think this is going to fuel prices at the pump to go up. I think we're going to see those go up quite substantially. So that's something not to look forward to.
All right, Bill, thank you very much for that. Let's move on then to the FX chart that you have. These are iShares.
FXC,
yeah. What is this?
This is China, and I think China now, everyone's saying, well, is it all over there? Is it not? And I think that China at the moment suggests to me that we're in a more of a consolidation recovery phase now. We're not actually in bull mode. Bull mode would indicate when we have the volume picking up at the bottom. The red bits at the bottom there suggest that we're slightly overbought, but that's to be acknowledged in a sort of oscillating state. The green part is oversold, so ideally you'd be buying where the last buy arrow was. Unfortunately, it started falling from there, reclaimed the 200-day moving average, and now has rebalanced above the 50-day, which is very positive. And I would say in a sideways mode with a bias towards positive on it. We're waiting for the inverse Fisher to go positive again. It's negative for this bounce. It's picking up a bit. So more consolidation, volume to pick up awaited, and I would expect further upside from this chart. It looks quite positive early on, but again sideways, suggesting all is not lost in that part of the world yet. Hold your horse and wait to go in.
Okay, Bill, thank you very much for that. And you've been fond of China for a while.
I mean, it's been good. I mean, anywhere the trend is good, Giles, we've got to be looking at. And so this is if you look at the chart overall, the blue crossing the green, it did so in April last year, looking very good. I mean, it's good. It's actually not a bad chart. It's sort of got a bit choppy recently. It's indicated by the vortex swapping and chopping over there. We're sort of we're in a slightly negative phase at the moment, but with a positive bias because we're above the key moving averages. And yeah, this one, if we're not in already, we're holding and we're waiting to buy more for the breakout here soon. Yeah, so China is certainly on the back burner. Anywhere where there's growth and there's a reasonable chart, we're looking for action.
Rank Group.
Rank Group is an interesting one because I've tried to find out why this is going up, Giles. We can't find any reason at all. But I picked up on the signal on Thursday night.
More buyers than sellers, I reckon, Bill. More buyers than sellers.
Well, 30 million shares. Well, 30 million shares went through. So you look at the volume at the bottom there. This is quite good. But look at the surge in the last few days, and this has gone. I did up 10% in the last few days. So this is really quite a move for a dull old share. And again, the consolidation. Consolidation since the last bull that was on the chart there. It's just basically gone sideways, and that really is a really exciting chart formation. Consolidation, breakout, and the indicators above the inverse Fisher positive. This time the multi-frame vortex is blue, so suggesting the short term up, and the volume levels. As I said earlier, that sort of 30 million shares went through on Friday, well above expectation, as those red bar at the bottom suggests. That's higher than normal volume coming in short term. Might be overbought short term again, but an appreciation of a breakout is working very well. Upside, I would suggest from here, by the red line on that chart there, about 130 level, which is 65% above the 200-day.
Okay, Bill, thank you very much for that.
Yep.
Now let's move on to the next one, which is
S&P.
which is the S&P 500. Yep.
Yep. Now again, using the same indicators, we've got a blue blodge on the blue vortex suggesting positive, although it's sort of sideways again, very much like the FXC chart, sort of in that consolidation phase. I put two tram lines on there at the moment. It's not a buy signals necessarily there for the moment, but it's the two tram lines that concern us at the moment. It's the 1,112 level seems to be the top, and around the 1072 level seems to be where the level where we might get some support. And if it goes below the 1072 level, we might have some problems. But suggest it's going sideways. Bias is bullish because it's above the 50 and the 200-day. Would expect some upside from here, I think.
That's good news, Bill. Thank you very much. And if you're exposed to that, then you're getting the benefit from the positive currency as well, aren't you?
Absolutely, yeah.
Okay, so Serco is the next one, Bill.
Serco has come up on the system that gave us Vata cooling earlier in the year. Look at the consolidation on that chart, just an appreciation of how sideways that chart is. And the longer these things go sideways, the more exciting the end product is. I mean, especially if it breaks. It's just crossed the multi-vortex, just crossed there. The supporting inverse Fisher to suggest the trend is positive, and the volume levels are good. Surging volume, good news flow, order books are up, dividends up, good outlook for this year, and I think this one is certainly one to watch, if not buy. So Serco SRP is certainly very, very interesting indeed.
Okay, thank you very much for that. Quick question, Bill. When something's been consolidating for a long time like that, what are the indicators that it's going to, which way it's going to break? I mean,
well, the volume is, for me, the long-term volume is important, because you don't want that slipping away, because it could be to say that we could be having some sellers in that period, and the whole thing could drop away. We want the share price to be above the 50 and the 200-day moving average, and the 60-day high. So wait for all those things to come through, supported by a positive inverse Fisher. So we actually have some trend positive on it.
Okay, thank you very much, Bill. And
that's right.
Also, let's have now have a look at, I think it's the penultimate one. It's the ETFS WTI oil security.
Oh, that's the oil contract. Yeah, we've got an oil contract. Now, this is where you put your sterling, because you get appreciation while holding it in dollars, especially if the dollar is remaining in this strong against sterling, and sterling remaining this weak. So, although we haven't got the breakout yet, you can see there's a line above the chart there suggesting when we get to that sort of 53, 54 level, we're going to get a breakout. The early green bars, the early green blodges on there suggested that's where it's oversold, and you could be looking for oversold earlier this year. Again, that's not a foolproof way of trading, because we can still have further drops. It doesn't mean to say it's the lowest point. It means to say that it's flagged up as being oversold in that zone, and it's very important to realise that, because it can be followed by further drops. It has dropped further, but when it breaks, the 54 level will certainly be very, very interested in this one. So again, looking at the trend isn't quite there yet. We haven't got it supported by the inverse Fisher, which is still negative, and the vortex, which is also negative. Volume level is okay. Would like to see a bit more volume by it, but certainly awaiting further movements here.
Okay, Bill, thank you very much for that. And finally, we have Medusa Mining. Again, another resource stock. What do you like about this?
Oh, I love this one, Charles. This one, Charles, is really, really good. I mean, look at it way back from the chart here. Look, it's sort of there's an appreciation of the trend here, well above the 200-day. Yes, it does flirt with the 65% above the 200-day on the left-hand side of that line coming down, and then it's had problems holding that for a long period of time, but now it's consolidating. Very good news flow, low-cost miner, lots of gold coming out of the ground here. It's in that sort of pattern of a holding, wait and see, because its multi-failure is still negative on the vortex, and the inverse Fisher is still in just a bit negative at the moment, but it's bouncing off the 200-day. A lot of miners have done this, and the green arrows have been supporting the buy points and the dips. And I think this one's ready to go. I think upside about 270. I think when we get going, and it's a case of wait for the short-term indicators to give you that sort of in a sense of waiting for a breakout from here. That's what we're looking for, a breakout to support everything else that's going on, and that will be coupled or supported with the multi-frame vortex and going positive, and the inverse Fisher going positive. So a lot in the wings for this one, Giles. Looking very, very good.
Great stuff. That does sound good. And